Hello traders. As I mentioned yesterday during the last tutorial, I said that I would try to study the market in order to see intraday stop hunts. I'm going to do that right now here with you. Please watch and let us learn together. I will start here. Okay, I'll start right here. So intraday, as for me, I would like to trade intraday stop hunts which lead to trades during when the London market opens in most cases, and sometimes when the New York market opens. Today, let me do and let me track stop hunts which lead to trades during the London market. Probably another day we'll do New York market. I normally wake up at 8. This is 8 here. This is 8. Okay, which stop hunts do you see, people? On my side, this is what I see also, although they are very minor, but right at 8, I see it's complicated a bit, where I see these stop hunts here. Because the problem is with this setup here is that the preceding day was dirty, as you see here. But they did come here to clear these stops. They came here to clear these stops, which probably indicates that on the following day they will go down, because after they had cleared these stops here, I've not seen any substantial move down, and this was quite a strong top hand. Yeah. So then, based on that, and since I don't see anything clear during by 8 o'clock in the morning, probably let me try to see to enter when price pulls back into this line here. Let us try to short when price gets back into this line, and in that case, our take profit would be here, because I believe they will come down to clear this area here if we sell around the area that I have indicated. Okay, so let me push forward and then we'll see what happened. I don't know what happened. Cross your fingers. Okay, right here we have this. Right at 10. At 10 we have this doji. Price didn't come back to this line, but this doji at 10 o'clock we would sell. This is a very strong indication that price is not going up anytime soon. So 10 o'clock in the morning, when this is exactly when the London market opens, this is where I would sell, and I would put my stop loss here, 41 pips. My reward would be 57 pips. Yeah. Oh, because these two places are very close and they are very clean. Let us look to clear these two places here. Let us put our take profit here. Cross your fingers, guys. Down we go, down we go, down, 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 down. Did you hit it? Oh yeah. That was a success. That is goal number 1 against market makers. Let us go to the next day. Let's go to the next day. What happened in the following day? Intraday stop hunts. Intraday stop hunts. Yeah. Okay. This is 8 o'clock in the morning. This is 8. Yeah. This is 8. That is when I wake up. I wake up at around that time. Look at my chart, and this is what I see. I see them having cleared this stops here. Yeah, let me show you. This is a stop hunt. This is a stop hunt. So means they have cleared people who were trapped here, and they've cleared people who were trapped. Sorry, here and here, and all these people have been cleared out of the market. See, that is what I see, and this to me is a very strong indication that. Oh, sorry, I've exposed the examination. It is a very strong indication that they have no, in the short term, they don't have anything to do here. Probably they will push price up to this place before making the next move. So this is 8 o'clock in the morning. Okay, so this candle closed here. I might have sold after close of this candle at 8 o'clock. But normally these people are very clever. Normally before the market becomes active, they will try to entice you to put your money at risk. They will try to force you to sell, to buy. And then when the market opens, the London market opens, is when they make the real move of the day. So look here, see what has happened here. Stops are accumulating. They are forcing people to, for example, here, they force people to sell. Here, they force you to sell after this candle. They force you to sell, and then they push price up. They leave you trapped here in this area. Here, they leave you trapped. And then they keep you at bay for a while. They show you some profit here in this candle. You hope you start to hope that probably I will not lose money today. And then at 7:45, you start to see negative, and then at 8 they push you out of the market. But remember, the London market is not opened yet. At 8:15, you see this bullish candle, which leads to, because this, after close of this candle, some people would start to sell here. After close of this candle, some people start to sell this one, and then at 8:15 they push the market up. People trapped here. New stops, new stops have accumulated here. So it is very likely that they will flush these people out also. They'll flush these people out of the market, and then they push up. So if you wait until when the London market opens at 9 up to 10, you'll have two advantages. First, you will enter when they have finished the business of taking people out of making money from losing traders. That is the first advantage. In the short run, that is the first advantage. Two, you will enter when they have kicked people, when they have cleared this area, which means your end will be somewhere here, and you'll put your stop loss here. So you'll risk only 25 pips or 22 pips, and the reward will increase. So you'd better wait until when it's enter at about 9 to 10, unless you are convinced that, well, unless you have, because if you have something which is keeping you busy, for example, after this candle, you close it. When you enter here, if you're busy, you're on another assignment and you cannot wait. But if you can wait, you better wait until when it is almost 10, or alternatively, you can use Fibonacci. You can use Fibonacci like this, drag it from here to here, and put a pending order roughly at around this area here. Put a pending order here and leave. In fact, today I took a trade by using this trick, and it worked very well. The reward was very beautiful. You see? So let us see what happened. It's 10 a.m. GMT plus 3 was approaching. Yeah, they flashed these people out here. They flashed these people out. So after close of this candle, you look to enter, you would buy. We don't wait for confirmation. We don't wait for confirmation, because the confirmation is, remember I told you yesterday that when you see a candle, it is already a fake move. So you don't wait for the fake move, because this is a fake sale. This one, it is a fake sale. You fake it by buying after close of this candle here. You buy after close of this candle. You put your stop loss here, 25 pips. your reward is 112 pips. Very beautiful trade. So let us see what happened. Okay, so right after that, we have the bullish candle. Some skeptical traders would buy here. The close of this candle. This is the best place to put stop loss for the 6 pips for 90 pips. Let us see if we would get it right. Up we go. So our take profit is here. This is our take profit. I think because this is an inefficiency, I think they will cover this area and come up here. Up we go, up we go, up. Yeah, we hit it. It was a good trade. Yeah. Let us go to the next day. And this to take about half an hour only because I'm tired. I want to sleep. My bed is missing me. Okay. So on the next day, it's a Wednesday. Let me see. Where is 8? This is 7:30. This is 8 o'clock in the morning. This is a stop hunt here. And this is also a stop hunt. They have flashed out these people here using this candle, which is a very strong sign that we are going up. But if you look at this candle, of course it happened during Asia, and you see it during at 8 o'clock in the morning, GMT plus 3. So what we should do is to wait, as I told you, is to wait until when the London market opens. Is when we'll be able to know exactly what direction will give us money. Because we have stop hunts here, because this when they came up here, they pushed these people out of the market here. So we have stop hunts here, we have stop hunts at the bottom. So we're not sure of the direction, but we know that by London things will become clear. Okay, so let us go. We push. Okay, this is another stop hunt. 8:45. Selling this would be dangerous because look at this. It is almost the same size as this one, and in fact, I think this stop hunt here is like an opposite stop hunt against this candle here. So after they had flashed the people out in this candle, they went up because they went up to clear people in this area here. So I wouldn't say that this candle is indicating any serious move. So I still wait until when it is London. You understand? I hope you understand when I say that this candle is a completion of the move after this stop hunt, because they kicked these people out here, and then this candle would definitely not push price outside the Asian box, and that is what happened here. Let me see if we had a better signal to enter. Yes, we have it. We have it right here. This is 10 at 10. Yeah, now I can. This is a reliable sell because this candle is flashed out. It's a culmination of a move which flashed out all these people here. Kicked this out, kicked these people out, all of them. Kicked this out, kicked this out, kicked these people out as well. So it is a very, very strong move. It's very strong indication. And the timing is also perfect because this is exactly during London. It is exactly during London. Yesterday I mentioned the rubber band principle. Price has been overstretched here. Look at this. If you had sold here, this is not overstretching. Price has not been stretched to the limit. But here, price has been stretched to the limit, like the rubber band. So if we release, you pull it this much, If you release it, I see this is our potential take profit. In fact, it's here. I see there's our potential. Let me see if we'll get it right and celebrate again. Down you go, cross your fingers, down you go, down you go, down you go. Oh, we just missed it. We just missed it painfully. What lesson do we learn in this case? These are clean highs here. So our take profit should have been here. This is where we should have put our take profit here. I'm sorry for, yeah, because as I said, you better have, I mean, one bed is in hand is better than 10 beds in the bush. This is one bed in hand, and this is 10 beds in the bush. So this, see this, see this, these are equal lows here. You have several candles here. I think this would be a better place to take profit. This would be a better place to take profit here rather than here. Put it here. So we have learned a lesson of making sure that you don't come with you don't get the right move and then come out of the market empty-handed. Yeah, this would be a very painful miss because price came all the way down and then it went up. What was the time here? It went up during just before New York. So if we were checking your charts and then you come and find this structure, you would close this trade because you have equal highs. You have equal highs. You open your chart just before New York, and then you see, sorry, not equal high. We have these equal lows. You have these equal lows. Let me show you. You have this low, and you have this low just before New York. That would tell you that they are pushing up, but this is a possible area, a very potential take profit area in the future, but it will not be cleared now. So you see these equal lows, you have checked, fortunately you have opened your chart to check price due just during New York. You close it, you close your trade, it's a very good profit. Push, 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 okay. Push, 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 push. 1, 8, 8, 8, 8. Where are you? 8. Okay. 8:30. Okay. So yeah, this is interesting. This is interesting and it is confusing. Where are we going? Are we buying or selling? We have clearance of stops here after this candle. We have a indicated really. We have clearance of stops. Sorry, here, and then you have clearance of stops here. And then what time was this? This was 9:45. We have, yeah, this was a, we have clearance of stops here. Here, they came down to clear this area. What was the time? The time was 9:15, just before London opens. You buy this trade here just before London opens. We don't expect them to push it and take you out in the short term, in the long term. So you would buy after close of this candle or this one and put your take profit here. Here we have clean highs. Let us learn from this past mistake. Let us say, let us put your take profit here and see what will happen here. Equal highs, because I don't see them failing to clear this area. And if they clear this area, they'll come here. If they come here, they will come all the way up here. Let's just see if we'll nail it again. Push, cross your fingers, guys. Push, 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 push. Oh, did we lose it? Oh, we are losing it. We are losing it. Oh, no, we did not. We survived. Oh, yeah, we lost it. We lost it. We lost it. We lost it. We lost it, guys. We lost it. Okay. But so what I want us to, what I think we are, what I'm learning and what I'm trying to tell you in this tutorial is to see the power of intraday stop hands, which you will use in combination with high and low of the week to get very high probability trades. Yeah. You can just use this and make money. Yeah. I've lost it this time. Let us go to the next day. Okay. But guys, what I'm learning from this loss here is the significance of this stop hunt. This one. This was a huge stop hunt. Whenever you see huge stop hunts like this one, you should handle them with care. Really. This was a huge one. It was a huge and a prominent one, which should have alerted us that these guys are going to say, I mean, it's going to be a sell day. And that is one. And two, the Asian box here is very, very wide. It's very wide. It's very wide. And if whenever you see such a wide Asian box, we cannot expect them to, and then you expect price to come all this way. That is a dangerous expectation. It's a dangerous expectation because within this box you see there's this huge stop hand. So that is a takeaway from this loss. Let us see on this day what happened. Step by step we go there. My process is learn from our mistakes here. This is 8 o'clock. So we have a very clear stop hand here. Very clear stop hand here. Because when they came down here in this candle, they kicked these people out. Okay. And then you had accumulation, and then you have accumulation of stops here. Let me show you. You have these stops, you have these stops here. That's an accumulation of stops, which means it's very, 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 these are very potential areas to be tested during London. If they go up, they will come flush these people out and make money before going up. If they go down, they'll probably clear these people here. These are clean highs also. These are clean highs. Yeah. Okay, so let us push forward and see. So if they clean the highs, we'll expect a sell. If they come to clean these lows, we'll expect a buy. Okay. Let us push. Yeah, they have cleaned the highs. What is the time? The time is 8:15. I'm not sure if this move is a stop hunt, and we have this. We have another high here. If it is tested, I don't know what will happen. Let us push forward. If it is tested and we have a rejection. So what I think is that this is going to be a sell in the short term, and when they sell, will come all this long way for 78 pips. I don't know if that was the case. I hope it was, because this is a strong rejection for me, and it is a clear flashing out of these stops which were held here. Let us see. Cross your fingers again. Oh, we lost it again. It's another loss. It's another loss. see another loss, guys. But I'm still hoping that we might. Well, I'm not sure if it's going. Let me press again. What time is it, by the way? This is 9:45. This is 10 o'clock. Okay. Mm-mm, mm-mm. Now we have something to think about. Yeah. At 11 o'clock, we have a very strong possibility of a move down here in this bearish candle. I hope you see it. Okay. So, um, anyway, let us think how we might have survived in this if we had sold in this kind of year. Let us see where we put our stop loss, and let us be very objective. Let me be very objective. Definitely, I wouldn't put my stop loss here. That would be very stupid of me. I wouldn't put my stop loss here. Definitely, I wouldn't do that ever. I wouldn't do that. You know where I would put my stop? I would put it here. This is where I put my stop. So let us measure this. Let us measure this. Let's see how many pips that would be. That would be 61 pips. You know what, guys? 61 pips is a lot. 61 pips is a lot. I wouldn't sell. Of course, if I was busy, I was rushing into something else, I would put that stop loss there, 59, 61, okay. And then my take profit is 76 pips. Well, probably I might take to have taken the trade that way, but the best way would be to wait. It would be to wait until when we have moved as close to the as close to the stop loss area as possible. See here, and then if well, this is a waiting game. If you wait and then somehow something happens and price doesn't move that close into your area and it leaves you, no problem. No problem. You have lost. I mean, missing a trade is not like losing money. See, we should accept missing trades. Missing trades is okay. There's nothing wrong with missing trades. So I would wait. I think I would wait here because here, this is where I put my stop loss. I would wait after close of this candle. I would wait and hope that another candle will come, which will push me closer to the area I want to put my stop loss. For example, if I had sold after close of this candle, that would be how many pips? That would be 22. That is reasonable for a reward of, because I know they will come to clear this sweet equal lows here. A reward of 116 pips. Okay. Now let us cross our fingers. Cross our fingers. Cross our fingers. Cross. Oh, did we miss it again? Oh, did we miss it? We did not. Oh, that was very sweet. That was very sweet. Very, very sweet. It was very sweet. Okay, let me continue. This was Monday. I hope you're learning something, guys. And already I know I see a very clear stop hunt here. See a very clear stop hunt. I hope you see it as well. I have it here. We have this. Where do we have equal highs? Here. We have equal highs here. In this area, let me show you. We have equal highs. Oh, no, I've exposed the examination. I don't like to do that. Anyway, let us just learn. Let us learn. We have this equal lows. I said equals. It's equal lows. We have them here. And they happened on Friday. So we know when the market opens on Monday, we know that it's going to be a buy day. Okay, so this is 8 in the morning. Okay, so we expect price to pull back down before going up because we can buy here. We can buy from this candle. Our stop loss will be here. That is 78 pips. That is too much. That is too much because if we put it here, we are not sure if it will be safe. So let us see what happened on Monday. Did we miss the bus? Yes, I think we missed the bus, and it's coming to clear this area here. Missing the trades is okay. Shouldn't mind missing trades. Shouldn't mind missing trades. Okay, missed that. Tuesday. And then I'll skip today, please, because I really want to sleep now. Okay, on Tuesday, um, on Tuesday, what do we have? On Tuesday, what do we have? Okay, Tuesday is complicated for me. This is 8 in the morning. What do we do in this case? We have a. I don't want to go to higher time frame as I've said earlier. Uh, but here we have clean highs here. We have clean highs here, and we have tops in this area. We have stops here, so we don't know which stops will be rated. If they rate up, it will be a sell. If they rate down, it will be a buy. Of course, in conjunction with other trading tools that you have in your arsenal. Okay, let me push forward and we'll see what happened. Okay, now time is this. So this is 9:15. They have cleared these people off. Yeah, no, not yet here. Let me push again. Yeah, these people are officially off the market. These people are officially off. Yeah, did they push up or they continue down? Yeah, they pushed up. So I see this as a clean stop hunt here. This is 10. I will buy. I buy this thing and my take profit will be, this is 45 pips, 46. Stop loss, I'll put my stop loss here for 32 pips. My take profit will be, I would hope that they come to push these people off and these people here because these highs are too close, 78 pips. Let me see if we nailed it this time. Cross your fingers, cross your fingers, cross, 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 cross. Yeah, we almost did. Oh, we almost did. We almost did. Another lesson on limiting our expectations. Is this another lesson? Yeah, where did they end? Is this another lesson, really? And if we limit our, so it means we should have exited here. How far what would that be? Okay, not bad. 57 pips, not bad. You know, the thing is that if you put your take profit here, you are sure that when price goes up, this place will be reached. That is almost guaranteed. So it's up to you. It's up to you to decide. Because I think when you become experienced, as I said earlier, I'm a very novice trader. As we gain experience, we continue to learn that it's not the number of people which count, it's the quality of the trade. You see, the quality of the move. That is what matters. So I'm not sure. Well, so it's up to you. It's up to you because I know for sure that after they have taken these people out, yeah, this there will be some reaction, whether it's reversal or pullback. In this case, I think it was a reversal, but at least our theory is still intact. It's still working. Okay, push, 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 push. Yeah, 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 yeah. So if you had not checked your trade, if you had checked your trade, for me checking the trade at this time, 13 hours is not easy. So I think the best way, if there's such a big gap between this this thing I here and the next, because there's all this area here, there's this area here, such a huge gap. It takes a lot of price action to push price here up to this area. It takes a lot of price action. So probably the best area to put a stop loss would have been here. That will give you a very good trade. And again, let me mention this. When you see after close of this candle, after close of this candle, you can always expect a small pullback. You can always expect a small. We don't expect price to just to jump like a bomb. No, we expect a small minor pullback here. We expect a small minor pullback because I remember I told you yesterday that after you have seen when the candle becomes visible, it is already fake, and that is what happens because after close of this candle, a novice traders will start to pile up their buy orders here. They buy, and then market makers push it down a little bit. When they push it down a little bit, and they will push it down exactly up to this place here. Here. So you can, after close of this candle, you can put a pending order somewhere here, which will limit the number of pips that will incur. So that's another advantage that you have. So you risk 28 pips for the value of 16 pips, which is quite beautiful. Okay. Okay, next trade. Hold this. Okay, next trade. Okay, I'll do 3 more days and then I'll go to what happened today because it's closer. It's in nice, beautiful, and simple. Yeah, this is 6:30. Push, 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 push. This is 8 o'clock in the morning. Yeah, interesting because we already have this to hunt. Have this. Mm, in fact, please watch this with me. These people here, let me show you. We had these people trapped. These people here. Yeah, we had them trapped until when they were flashed out by this candle here. By this candle and this candle. So okay, so this candle, this move flashed out these people, and then this candle here flashed out these guys here. Oh, sorry, I don't want to expose this. Sorry, because this is an examination. Okay. Okay. So when you see this, you are sure that the next day is going to be a sell. I mean a buy. It's going to be a buy because they don't have any business going downward in the near future. Okay. So what do we do? This is 8. This is 8. If we buy here and put our stop loss here, that will be insane. Even if you put it here, it will be insane. The best place to put our stop loss is here. So if we buy here, it is insane. We wait until when it is very close to 10 or 10 a.m. GMT plus 3, because by that time, price will be closer to this area. Remember, we already have stops accumulated in this area here. Let me show you guys. We have stops here. Oh, sorry, I should use a simulator. If you guys would you be willing to contribute a simulator for me, please? Because I don't have one. So a simulator will give us very realistic tutorials. I assure you. So at 8, at the back of your mind, you know that we are going up. So, and this is 8. At 8, you know, it's very likely that these guys will push it down to clear these people out before going. Okay, that is, you know that for sure, the back of your mind. So what do you do? Sorry, you wait, you wait. Let us see what happened. Yes, see this candle here. This is 9 o'clock. If we buy from this and put our stop loss here for the 2 pips, where do we expect them to go? I expect them to come and clear all this area here. This is 133 pips here. This is what I expect them to do. So if you are satisfied with that, you can just buy. Alternatively, let us push forward and see if we would have got a better entry. We did got a very better entry. After this candle here, we buy for that candle. Let me see if it was not a reversal. And I'm going to push forward and we will prove, all of us will prove how powerful stop hands are if price goes up, because these 2 candles are very, very powerful bearish candles. If price turns around here, all of us will realize how powerful stop rates are. Yeah, see that? Guys, this thing is real. Look at this. Look at this. They are scary, scary bearish candles here. Imagine, would you have the courage to buy after close of this candle here? This is 9:15. Would you have that courage really? Okay, let us push. So our take profit is here. I've indicated it here. Push, 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 push. Shall we survive this? Oh, I'm worried. I think we're going to lose this. So push, push. Oh, we have lost it. This is our second loss so far. We've lost it. We've lost it. Sorry, guys. We have lost it. We have lost it, but I know that it's very unlikely for them to wipe out this area. I think on Thursday, I think we'll buy from here. Let me put a line here with a different color. Oh, these guys are monsters. See what they have done. Really? Oh, yeah. These guys are monsters. So then, this is very interesting. Again, okay, where would have been a good place to put our stop loss then? Yeah. Oh, this is very interesting. I think there was news here. Oh, guys. Hey, here. After close of this, you put your stop loss here. They come, they push you out, up them. How do you avoid that? Please let all of us think about this. How might we have survived in this case? It's a very typical example of how strategic the market makers are. Should you have a standard range of pips in your stop loss, say 20 pips? Because if you're 20 pips here, you would have survived. 20 pips should bring you here. So what is the way? How do we survive cases like this one? Should you have 25 pips? Should you have 30 pips? Let us, all of us, think about that, because this was a painfully good trade. Of course, our take profit was not was also missed. Should have been okay, even if it was here. Yeah. Okay, but at least the theory behind our trades is still safe. Probably because this happened during New York. This happened during New York, so probably would be on our charts during that time. And then you would buy this candle. You buy this candle because it is a very clear buy. They've cleared this area, they've cleared this area. We just buy this. And we just take profit somewhere. Probably that would have saved your day. Let me go forward. I want to stop this because I'm tired, but this is going to be the last day before I skip to today. Please bear with me. Okay, this is open with this. This is 8, okay? We have this. I hope you see it. Sorry. Okay. This is a very nice stop hunt here. This street actually. And this is 7:30. So what do we want to see? Want them to push price up to this place here, and then we will sell. Because I don't see this is a very powerful stop hunt. I don't see them coming to clear this area like they did in this case here. I don't see that happening in the near future. So sell would be that area, and then we'll take profit here. Clean highs here, clean highs up to here. Go out. Let us see what happened. Yeah, we sell. We sell after close of this. What is the time? Time is 8:45. Oh, it is dangerous. Okay. And then we have a 9:15. Again, push. Okay, yeah. Now we can sell. 9:45 we can sell here. Our take profit goes here. I mean a stop goes and the take profit comes here. Let us see if it worked. I hope it did. It did. I hope it. Oh yeah. That was very nice. Did it? Where did it take profit? Probably we would have missed it by a few inches, but really, I think we should limit our appetite for pips. I think we should have limited our appetite for pips. Yeah, put it here because this is a clean hand, not even here. Yeah, guys, this is a for discussion. Let us think about this, please, because I know when they turn this around, these people will not survive, and these will not survive, and this will not survive for sure because they are close together. And then we have this gap here. This is the gap. So let us say put it here, but as we continue to develop, we'll be able to put this properly. Okay, I hope so. But figure out for yourself how you handle this. Just let me do one more day and then I'll skip. Seen it already. You've seen it with me, and this was a Friday. Not a very good day to trade, but if you see something clear, you can try it. Have this top hunt here. So what do we see? When you know what are we going to do? We'll wait for them to come close. This is Asian high, and it is exactly the area where The stops are rated. So we wait for them to come, and then if we sell, this is where we will go out of the market. With money, of course. Push, push. Oh, they should not go. They went down. Well, for learning purposes, let us talk about this. This is a stop hand, yes, and then we have another stop hand here. I'd say this is in 10. Sorry, I failed to notice. So be careful, guys. If you miss stop hands, you have missed money. You have this. You have this. It's very important. So let me show you. There are stops accumulated here. They pushed it up, took these people out, okay? And then they came back down, okay? And then coming down, people saw this candle developing, this bearish candle. They sold, because retail trader cannot push the price. I mean, stops accumulated here. In order to, since they are going down, they pushed it up and cleared this people, okay? Now, they are no longer interested to go up because they want to go down. So they pushed it up, cleared these people out, these people here. So this should be our sell zone in the short term. To the pip, guys. To the pip. To the pip. They sold here. This was 830. When prices start close to the stop hand, you just sell here. You put your stop loss here. The take profit goes there. Okay. Goes there. This is a safe area. I would have probably, you can put 80% of your position, take profit for 80% of the position here, and then they leave the remaining here. Now let me skip to, no, this is very enticing. Let me do Monday and then I'll skip to today. Okay, deal? Okay, it's very enticing. Okay, go to Monday. Hope we learn, guys, because it's the aim of this and you help me to grow. Okay. Okay. Now, on Monday, what do we see? On Monday, we have this. This is top hand, all of this mess. This is top hand. Okay, and that time is this. This is 830. Okay. I also have top hands here, which have led to this bullish candle. Okay, but I think price. I think these stop hands here will push price down rather than this and stop hands pushing price up. So let us look to sell. Yeah, you get it. Get it. And our take profit is going to be here. Okay. Up. So this is, what time was this? This was 9 o'clock. I think there's nothing wrong with selling this. Here. It's a clear sell. 25 pips. Oh, how many pips? Okay. Let me push. Up. Ooh, did we lose it? Oh, we lost it. Cross your fingers. Oh, we lost it, guys. We lost it. Because our take profit was here. We said it was here. Well, again, we learned that we should limit our appetite for pips. One way in this case would be to expect a pullback in this candle here. Expect a pullback because this candle is how many pips wide? 21 pips. So if, for example, you had put a pending order here, you'd exit here for 32 pips here, because it is almost certain. Well, if you sell here, it is almost certain that there's a 99% chance of price coming to this area and this area. The further down you go, the lower the chances of prices coming to you. See, please take note of that. So the best approach is to reduce stop loss stop loss pips by expecting a pullback in this candle, and then you put your take profit here. Yeah. Okay. Because by the way, this is also a stop hand. This is a stop hand. So they will push price up from this area. Okay. It's very unlikely for them to clear this area. Okay. Before clearing this area. This stop hand becomes invalid, in my opinion, when this area here has been cleared. Let us see if that is correct. I've said that this stop hand here will become invalid when they have cleared out this area. Let us see if they will clear. If you had bought here, and this was almost New York, if you would have survived before price at this area. Oh, no, you did not. You did not. Lost it. Okay, so let me skip to today. I'm watching quite carefully because I don't want to delete today was no, it was for yesterday. Already yesterday. Yesterday. I don't want to expose the examination. Yes, we have it here. Yes, what happened today? Today we have this stop hand here. Okay. From last week, we know it is almost certain that we will sell. What time is it here? This is 5:30. Let me push to 8. And what time is it here? 7. Push. We have 8. Okay, 7:30. We have 8. Yeah, 8. Now, if we sell here, this is for the 3 pips, and the most possible take profit is this area here, which is 47 pips away. What do? We wait. We wait until just before London. Yeah. See this? This is a 9:30, 9:45. You sell it. Oh, 26 pips for 66 pips. Let us see if we would have made it safely. Oh, we missed it. Oh, did we? Did we? Cross your fingers. Yeah. Very good. It was very, very sweet. I said here, 66 pips. 68 actually. Yeah. So guys, I hope this video will help you to continue to understand the power of stop hands. I would kindly urge you to ask me questions. People are watching this, but they are not asking me any questions. So I will not develop it if you do not ask me questions. Please let us develop friendship. Ask questions. Ask questions. We'll talk about them. We'll prepare 2 meetings together in the future, probably. Ask questions. And I would insist that you have to practice this. Go through the charts. If you can purchase a simulator, I don't have one yet. I hope to have one in the near future. But please, Use simulators. Simulate this. Do it in 1 year, 2 years. Do weekly stock funds. Do intraday stock funds, and let us take it to the next level. So let us take this to the next level together. Guys, thank you very much for your cooperation. But please, I insist, questions. Ask questions, give comments, bombard me with questions, challenge me. Trading is not easy. Thank you very much. All the best in your trading.